Well, it's tax time once again for individuals, and with the 2010 filing season upon us, we bring you the information you need to make this year's submission your best one yet. Joining me in studio to discuss this topic is Rayland Dunbar, Financial Advisor at Finlogic, Peter Carlisle, Director at CTF South Africa, and SARS's Nathaniel Mabetwa. He's the Group Executive of Taxpayer Services. Firstly, to the guests, good evening, welcome to the show. Before we jump into the discussion, I know we've got a quick question on tax that we want to just take up. It comes from Godfrey and Santon. And Godfrey asks, how do I know if I need to register for provisional tax? Rayland, I'm going to throw this question straight at you to pick it up for us.
Provisional tax is something where you're earning an income which is not effectively regarded as remuneration from an employee or an employer as such. So the idea really is that anybody who's earning any kind of additional income, whether it be from any sort of situation in terms of rental incomes or trusts, also need to register companies, CCs, etc. All of those sort of entities need to be registered as provisional taxpayers. I think Peter will be able to go through the Act a bit more in detail. So, yeah.
Peter, yeah, I mean, we've picked up we know about the entities, trusts, and certain legal entities as well. What else fits into that?
Well, all individuals that earn an income, salary, or any income, I beg your pardon, which is not remuneration as defined, or an allowance, or an advance. Any taxable income, they would need to register for provisional tax. As Rayland has pointed out, the trusts and companies and closed corporations are automatically provisional taxpayers.
Okay, well, Godfrey, there's your answer. If he fits into one of those brackets, I'm sure he'll know whether to now actually register for that. Nathaniel, I want to turn the attention quickly just to say, well, what's the lie of the land? We had the filing season open on the 1st of July for individuals. We're pretty much halfway down the line if you're doing a paper return. What has the response been so far?
Well, the response has been quite good. If you look at the submissions we've received so far, we're sitting at about 800,000 submissions that have come through, and most of these are largely individuals. So it's not necessarily including the companies or anybody else that is not an individual that is submitted. So if you look at what we received last year, so comparing to last year, this is really quite a good response.
Yeah, but what do you put it down to? Obviously, e-filing is getting quicker, better, hopefully more streamlined. Is that one of the reasons it's happened?
I think it's a combination of factors. So one of which is the fact that e-filing is better and easier for people to use. But also, I think there is a change in the compliance culture in South Africa, which is something that we need to encourage. We see more and more people coming through to the front office at any of our offices wanting to submit. We've sent out messages out there to taxpayers to say, come forward and submit. We also believe that the whole penalty issue that we discussed with the public last year is beginning to bear some fruit. Because if you look at it, it's important that we not only look at people that are compliant, but we look at people that are also not compliant, because it's really, we owe it to those that are compliant to do something about those that are not compliant. And we introduced the administrative penalties last year, and I think that the response is partly as a result of people really taking up the whole process of coming forward and submitting as opposed to waiting to be slapped with penalties.
Obviously, the idea being if we can widen the net, we can hopefully maybe even lower the tax overall for all the existing taxpayers, if at all possible. Peter, obviously very, very busy time for you. It must be. I think just for the viewers' benefit, it started on the 1st of July. What are the different sort of milestones in terms of dates that people need to be remembering as they do this filing process?
The first cut-off period is for all your manual submissions. That means all your non-e-filing submissions. That is the 30th of September. For all electronic or e-filing submissions, they have to be in by the 26th of November, and then those are non-provisional taxpayers, and then all provisional taxpayers, meaning the balance of all the other taxpayers, would need to have their submissions in by the 30th or 31st of January 2011.
Okay, so various dates. I mean, if we're talking manual, we're halfway through the process already. We've got 800,000. I think we're looking at maybe 6.4, 6.5 million taxpayers. Is that about right?
Well, if we can get there, we'll all be happy. But We currently, I mean, if you look at what we received last year, we ended up at about 4.5 million.
4.5.
Yeah.
Okay, right. So that's including provisional taxpayers.
That's including provisional taxpayers.
Ah.
It's including the manual submissions as well as the e-filing submissions.
Okay, well, 6.5 million. That's something to go
Yes.
for.
I would imagine that the bulk of those are all electronic or e-filing submissions. I would be surprised if there's a lot of manual submissions.
Absolutely. Over the past 3 years, we've seen a complete change in the submission patterns. So 3 years ago, the bulk would have been the manual submissions, so people walking into the office with their paper return. That has completely changed around. So last year we saw for the first time a complete shift where we only had about, the total came to about 100,000 manual submissions. Okay, and the rest was e-filing, or people that walked into the branch offices and got assisted over the counter, which would count as an electronic submission.
And how many people are using sort of professionals to do this, and how many are actually going about it themselves?
Well, I don't have the actual numbers now, but it's quite a number of people that are preferring to go through the practitioners, as we call them. And also we are seeing a lot of people trying to do it on their own, given the fact that we have now introduced some changes in terms of the filing season, specifically on e-filing, and they are finding it easier to do it themselves.
Okay, Peter, I see a small smile on your face as you said they were preferring to go tax practitioners. That's where you sit. I think the big thing, and one of the practical examples or practical problems that I always find, is that there's so much that changes in tax law. When it comes to actually doing my returns from last year, everything's changed. I need to now go back into almost the history books to say what I need to put down on my tax return. What are the key changes that happened, and what should we be remembering when doing the 2010 tax return?
Well, Sean, I think there's a number of changes that have taken place, but I think most importantly, and that's not necessarily a legislative change, it was more change to do with the way that SARS has applied the e-filing procedure, in that it pre-populates your IT12, your tax return, with the IRP5s from your employer. So if you've received various IRP5s, those will automatically already be on your IT12, on your tax return. One of the things that we have experienced as a practical issue is that individuals, when they leave one entity and they join another company, and their provident fund or retirement fund moves from one entity or one fund administrator to another, the leaving fund will issue an IT3. That amount, that IT3, will automatically be populated on your IT12. Now, if you as a taxpayer, as the taxpayer, if you do not claim the expense, because that amount is not taxable in your hands, it's actually it's not taxable because it's moved from one fund to another. If you don't show that deduction, the SARS e-filing system will automatically pick up that amount and assess you as if it was paid out to you. Now, the problem that comes in there is that in the event that you were entitled to a refund, your process now would be to either object or resubmit the tax return, and that in itself might take up to 6 months, 8 months for SARS to amend that assessment and your refund to be paid out. So it could become very frustrating. Had you known that you should show the deduction up front, you could have avoided a lot of problems and stress in your life.
Okay, small mistake, perhaps big consequences. While we're on the topic of provident funds, pension funds, Nathaniel, really a question for you. I know the Revenue Laws Amendment Act brought about a withdrawal tax table for pension and provident funds, where we moved away from average rate of tax to the table if you are actually taking money out. I know that at that stage there were some problems with the SARS system. They said that they were going to then recalculate people when they did their 2010 tax return. Is this still the case? What is it that taxpayers who have withdrawn out of pension funds, what should they be expecting?
Look, we have fixed that problem. The system has been put in place. Other than that, we have processes in place to make sure that if a person comes through with that kind of a problem, we will speed it up in terms of resolving the issue. I mean, granted, in the past it has happened that way, but going forward we're saying that we have fixed the system, and if there are any problems that are going to make it past the system somehow, we have a process also internally of making sure that we speed up the process.
Speed it up. Of course, the question still remains whether the average rate of tax versus the tax table was higher or low, and what's going to happen as a net result there. Rayland, just quickly, I mean, talking about the changes, to me, one of the most significant ones was the falling away of deemed kilometres for business travel. Everyone in this tax year that we currently see ourselves in has to keep a logbook, which means up to 28th of February 2010, I can still deem business kilometres. Surely this is something that people should be looking at when they're doing the tax returns.
Yes, I think the biggest concern nowadays is that people realise that they've got to start keeping logbooks for the new tax year. But still, for the previous tax year, people were allowed to basically claim up to 32,000 kilometres a year, of which the first 18,000 is regarded as personal travel, and then anything over and above that, to what you can prove you did in terms of kilometres, is regarded as business travel up to a maximum of 32,000 kilometres. Now that's really important, because a lot of people never kept logbooks for the previous tax year, and if they were in a position where they could possibly, or where they did have a travel allowance, it's something where they need to make sure that they are correctly deducting those for the previous tax year for their tax returns that they're doing now, and not in terms of how the new tax rules are actually working for the new year. So they need to take advantage of that last window period effectively in terms of deemed kilometres.
Comes back to your earlier point of making sure that the taxpayer himself knows what he can claim. We spoke about the moving of from one retirement fund to another, but the same applies to medical aid expenses, contributions toward retirement annuities, and certainly the travel allowance. If the taxpayer needs to claim that, otherwise it won't be granted, won't automatically be populated in his tax return.
It's really important for people to get their tax certificates from the various insurance companies that they have products with. And the big things really are income protection policies, so that's your sickness and disability income policies, retirement annuity policies. Again, there's been a change there. In the previous tax year, if your employer was contributing towards your retirement annuity, it's not treated in the same way as what it is going to be treated in the new tax year. The new tax year, even if the employer is actually paying for a retirement annuity, the employee is now receiving the actual tax break on that. So there's just little things and differences that need to be aware of when people are doing their current tax returns. Another way as well that I find is probably the easiest way for people to claim for their retirement annuities, income protection policies, etc., medical aid and so on, is to build it into their payroll. Very often if you take your certificates, your contribution certificates to your HR people, they can actually build it directly into the payroll. That way you get your monthly tax deductions of what is tax deductible effectively in terms of what you're contributing to these funds. And the nice thing is that would actually populate onto your RP5. So a person that now does e-filing and all of that pre-populates onto e-filing, it just obviously makes it a lot more of a less cumbersome sort of process in terms of actually getting those tax deductions, and also not forgetting to claim for them, because that's the biggest concern.
Yeah, so obviously getting the monthly break, and also from a streamlining point of view and making it a bit easier, certainly the way to go. I want to spend some more time in the second half really looking at those deductions, because I'm sure that's what a lot of people are looking to say, well, if I'm going to give, I want to see what I can get back. So we'll deal with that.